Hello guys. Yeah, today's video is gonna be on valuing the US stock exchange, especially the companies listed on EasyEquities. This is so that at least when we find good companies, we can buy them immediately. There's no use valuing companies that you're not gonna be able to buy because they're not available on any platform. Please do bear with me. I have a window here behind me, so hence the lighting is a bit funny. So there's a lot of light that comes through from that side, and then it makes me dark. Ideally, I should be recording from that side of the room, which is weird, but yeah, I mean, it's my office. I'm actually not a professional YouTuber or a full-time YouTuber. I'm an accountant. So what I'll be doing today is my actual work. And so it didn't make sense to me to move the other side for work. You get what I'm saying? I'll see how it goes in future videos, how you guys feel about it. Let me know, and then I can see if there's any way I can reconfigure the room so that my desk is facing an angle that allows perfect lighting for the cameras. But yeah, as I said, other than that, this is why I get paid. Um, as I said, I'm going to be analyzing the US stock market. And the idea is to have a short list of companies that are always ready at hand to buy. Just to give you guys perspective, the US on EasyEquities has got about 670 companies. Or if you see my AirPod, it's because I'm listening to music. It's going to be a very, very, very long session. And please just bear with me. Play music in the background. Watch this. If you're gonna watch it, it's gonna be interesting that this is the type of video that you chose to watch. I know normally my share valuation videos, especially where I'm gonna keep quiet for long periods, they tend to essentially just be boring, plain and simple. But to give you guys an example, when I valued the Johannesburg Stock Exchange, that's about 400 companies, and it took me a month. So you can imagine with about 670 companies on the New York Stock Exchange, as well as the NASDAQ. Yeah, it's gonna take me well over a month. Today's session, I just felt like recording for the sake of you guys can at least get to see when I start this thing from scratch, what it looks like and what it means when I give my opinion on companies to invest in. It's not stock tips, it's not some uneducated gamble that I'm sending you guys to. It's an accountant's honest valuation. And at the end of the day, it's something I stand by. It's me doing my job. I'm in the process of getting licenses for shares and stuff. But outside of the licenses, I'm well equipped to value companies and speak about them for that matter. My favorite instrument is this. It's a financial calculator. There's no way where I go without this, right? But for your sake, I'll be using Excel. And also for the sake of spreadsheets, I'll be using Excel so that you can see essentially where my numbers are coming from and where they're going. As I said, I am listening to music. Feel free to listen to music. Comment on the lighting. I know there will be some dark spots. I know there will be some areas that I feel as if could have shown better. But let's see how bad it is and take it from there. All right. I'm gonna share screen. Da, 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 da. Yeah, I can't share my entire screen. Mm, that'll be interesting. I can share screen too. Yeah, so as you guys can see there, that's where I'll be doing the valuations. And just for interest sake, if I can share my current screen that I'm on. So essentially, I'll open the financials of, for example, in this case, the name of the company is 10X Genomics, right? And then I go to the 10K filings. The 10K is essentially what they call the section number that compels companies to file annual financial statements. As you can see, it's the United States Securities and Exchange Commission in Washington, D.C. And the company, as I said, it's 10X Genomics, the genomics company. And this is where I get my information. All that stuff, boring, Yep, that's what I go through. And you get to see the business, the risk factors, the unresolved stuff, comments, properties, legal proceedings, mine safety, disclosures, all of that stuff, management discussion and analysis of financial condition. My favorite part is that one, financial statements and supplementary data. And that's because that is where I get to do my job. I like to interpret my own numbers. Sorry. I don't like CNBC. I don't like the Wall Street Journal. I don't like Jimmy Cramer. I don't like anybody telling me this is a good or a bad company. I prefer to do that myself. As an African kid, sub-Saharan Africa, I prefer to do that myself because I am educated in this stuff. As I said, I am a finance major. I've completed actually graduate, you name it, however you call it in the States. But yeah, this is that. Chairman goes to the United States. Let's see how that's gonna go. So that's just to give you background where I get my information. As I said, it is the 10K. There's even a summary, like it's an interesting read, to be honest. If you don't read financial statements, I honestly don't know why, because everything is honestly there. Risk factors, for example, what the business does, it's it's out there, man. It's out there. So there we go. Overview, we're a life science technology company focused on building innovative products to interrogate, understand, and master biology. So to master the human body. Our mission is to accelerate the mastery of biology to advance human health. That's very nice. As I said, I'm not one for stories too much. So I'm gonna just jump straight to the financials. And what I like is that you can just click it and it takes you there, right? Financials, as always, you guys know me, I start with the balance sheet. Balance sheet is where you get the strength of the company. You get the war chest. You get to find out, does this company have resources to face anything that comes in future, right? And on the balance sheet, what I'm mostly looking for is current assets. So that line item over there, right? And the idea is because this is basically the cash that the company has. You'll see what they've got there is the cash and cash equivalents and restricted cash and then accounts receivable. So those are people that owe them money. Then marketable securities, those are like shares. So what I like about US companies a lot is that they tend to invest a lot of money in other companies. So you find that a company makes money from their core product, but they also get dividends from their shareholdings and get dividends and appreciation of the assets from holding other companies. So that's the balance sheet. That's also you get to see the liabilities. Liabilities is all the money that a company owes to other people. And starting with current liabilities, this is the number where they owe people in the next 12 months. So you can see they've got cash of 635 million. I think it is million. Let me just remove that. Oh, yep. There where it says in thousands except share and per share data, meaning that it's 635,034 and then thousand. So you add 3 zeros at the end, $635 million with a D. We in the States, baby. Come on now, take America. Ta, 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 ta. Ooh. Sorry, I got music in my ear. But yeah, we're dealing in dollars and they owe $131 million in the next year. So with $635 million, you can pay off $130 million. Then the other thing that you'll see in South Africa, what we have is long-term liabilities are essentially a line item. I see in the States, they just put it there and then give you the total liabilities. So you essentially have to do a manual calculation to isolate the long-term liabilities themselves. Basically, this is money that they owe for more than 12 months for indefinitely. And as you can see here, it's $92 million. Ooh, right? And yeah, so with $635 million and $223 million in liabilities, they can pay their liabilities 3 times, can pay that without even flinching. Imagine being able to pay off your mortgage, your everything for the year and for the next 30 years without even flinching. That's what I'm talking about, right? So that's the balance sheet. That gives you the strength of the company. Then, as you guys will know, the next that I look at is the statement of financial performance or the profit and loss statement. I am a fan of looking at this after you've looked at the balance sheet because for me, no matter how strong or how tough times are now, what's important is can you withstand the future that's coming? If you can't, then it doesn't make sense for me to even consider how you're performing today, right? Not because I'm a mean person, not because I don't believe in companies or people or what have you, but simply because as a shareholder, this is the place where I have to put my money and I have to be able to sleep at night. So if I'm not able to get comfort that you have got a strong war chest, then I'm not even interested in your day-to-day performance because sooner or later it's gonna run out, right? Whereas, for example, with 10x Genomics, as you can see, they're a loss-making company, but look at their revenue; it's growing in leaps and bounds. And if you look at their net loss, it started at $542 million, and now it's at $166 million. So the loss is decreasing. From there, it's profitability. But I can take that when I know how strong the balance sheet is, when I know how much cash they have on their books, right? Not saying I'll invest in this company. You'll see I'm very picky about companies that are loss making. I'm not someone who's there to give you confidence as a company. You're just supposed to be profitable. It's my money and I must sleep peacefully at night, right? But that's essentially what the statement of financial performance shows you. Then you have the statement of comprehensive loss or profit. Not going to go too much into that. Essentially, this is where you see the movements in shares and where you see items that have got nothing to do with the day-to-day business. So they've got $4 million value drop in the value of their shares. That's, yeah, as I say, they're not in the business of shares, they're in the business of health, and I'm more interested in the profit and loss side. Are you running the health business well? We'll come to the investing business afterwards. Then you've got the consolidated statement of share of stockholders' equity. This is where you get to see how many shares are involved, how many have been issued, how many have been bought back, that sort of thing. So here you get to see the ownership of the company. I never really analyzed this because, to be honest with you, at the percentage shareholding that I buy, it really never affects anything. I'm never going to sit on a board, at least in the next 2 to 3 years, where I'm going to be fighting the company for the investment decisions, whatever. All I will do is I'll participate in the annual meeting of shareholders. I'll ask questions, I'll get answers. If I'm not happy with the answers, I will ask maybe even more questions. And if the financial statements do not align with what I think management is saying, I walk away. One day when I'm a billionaire, then it will matter to me that I own 50 million shares out of the 96 million shares issued, right? Then the statement of consolidated cash flows. This is like the statement of profit and loss, except for cash. This just shows you on a day-by-day basis or on a year-by-year basis, does the company have enough cash to keep on running? And as you can see there, cash and cash equivalents at the beginning of the year and cash and cash equivalents at the end of the year. And then the movement in cash shows you essentially what is happening there to the cash resources. This also shows you where the company has got loans that they have to pay off, the investing activities that they've got. So you can see there that they bought $282 million worth of equities in other companies. In previous years, they never used to be there. So you know that this year, that's where a lot of their cash went. They bought property and equipment to the value of 131 million. And then what's this? And here they bought a business for $4 million. So this is the statement that tells you what happened to our cash, right? And then up here, it speaks to then the profit and loss statement, however, based on cash as well. And there it shows you that net cash was spent in this financial year. And then the statement of cash flows continued. Okay, it just shows non-cash investing and financing activities. Yeah, here it's an extension, basically. Then you get the notes. This is where you get to find out more information. So the marketable securities, this is where, for example, it explains that the company designates investments in debt securities as available for sale with original maturities of 3 months or less from the date of purchase. Yeah, here it just basically explains everything that's in the financials. This is where you get more information on, basically. The reason I'm rushing through all of this is because this is background information to what I'm doing. Yeah, I want to get into it. I want to start working, you know. So what I'm going to do is I'm going to share my screen, the second screen, and that's where I'm doing my valuations. And in essence, that is where, is it this side for you, this side or this side? Yeah, for me, it's that side. But when I point on the screen, it looks like it's this way. So yeah, now you understand my confusion. The idea of showing you this screen is so that you can see as it develops. As I said, I will be sitting here working in the background. You can see I've already computed a few things. 10x Genomics, the financial year end is December. Here are the current assets, here are the current liabilities, here are the long-term liabilities. And then there I get to show you if both are good or not, i.e. if you divide 635, let me do it in this column, 635 divided by $130 million, you get about 5 times. That's the number of times they can pay off their short-term liabilities. And the second one, if I say 635 divided by the long-term liabilities, that gives you 7 times that they can pay that off. Essentially. Uh, so let's give it a go. Da, 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 da. Now we get to the income statement. So 2023. So this is for December, right? So I'm just gonna I'll put 0 there because December earnings per share is only gonna come end of this year. Or I can just put the latest, which is it's a loss of $1.46, then a loss of 0.53 cents, then a loss of 5.3 cents. Oh, so it's only $1.46. It's 1 cent 46. Oh. There we go. Okay, now let me just put them in the correct places because it's even confusing me actually. Dividends, I'm assuming they're not paying dividends, but what I'll do is I'll search control find and then I say dividends. Is 0. Oh, not 0. We have never declared or paid any cash dividend on our capital stock. We currently intend to retain any future earnings and do not expect to pay any dividends in the foreseeable future. Any future determination to declare cash dividends will be made at the discretion of our board of directors, subject to the applicable laws, and will depend on a number of factors, including our financial condition, results of operations, capital requirements. Wara, wara, wara. Very good wara, wara, but wara, wara nonetheless. Wara, wara nonetheless. Wara, wara nonetheless. Let me just get the remaining earnings per share. for completeness sake. So yeah, this is basically the gist of how I do my analysis. And what you even get to see is that even when a company doesn't meet my requirements, I still follow through and enter the information. I'm a nice guy. I'm joking. It's a completeness issue. I prefer to have all the information so that even on a day where something turns and I'm having second thoughts, whatever, I can always come back and say, this is why I didn't invest in this company, or this is why I invested in this company. It just makes you more thorough, more refined. It mustn't be lazy, guys, eh? Not in a bad way, but like, man, do something and do it well. Do it to the end. Don't have any loose ends that are hanging over you or that sort of thing. In terms of the valuations that you're doing, yeah, don't just finish the thing, man. Okay, so there we go. So the average dividend per share, earnings per share is negative $2.60. Okay, this they told us very clearly that they don't pay. Then for the Google share price, I'm going to say equals Google Finance. Google. Does Google have an E? Yes, it does. Okay, then that's the one that I want. And then the stock ticker, I will tell you now, 10x genomics stock. There we go. And so it's on NASDAQ and it's TXG. So it will be, it's going to be NASDAQ that TXG, close bracket, enter. Oh, come on. Google Finance, NASDAQ. Yeah, the heck around that. I've already got another, let's see, dividend holdings. Okay, so it's on that one. Da, 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 da. What am I missing? I think it's the enable edit. Yeah, this would actually work better if it's sort of on the R screen. Yeah, yeah, that's better. Hello, me. Hello, me. There we go. Was this side I'm working and disturbing me? Whoa. Right, let's see. Let's see. No, something's um, um, my formula is not activating. Let's see if I refresh the page. Okay, guys, my thing doesn't want to work. Yeah, but I've got a whole number of ways that I can try and make this. Yeah, it's not working. I don't know why. Let me check on this one. This is my JSC evaluations. So as you can see there, it's got all the numbers, then it's got comments there, other factors, whatever. I wonder why this is not working. I'll just check it on my phone so that I can just make sure that I've got the formula correct. Okay, let's maybe do this. Let's say Google Finance. Because I don't understand why it wants from a certain time to another. Now let me check it on my phone and then fill it in there. Dividend value. Let's see, let's see, let's see. Is that normal? Is that normal? My spreadsheet doesn't want to work anymore, guys. Let's see if I say edit. No. Okay, let me get the Sheets app. That's so annoying. Mhm. This is company valuations. So what normally takes long is delays like this. You can imagine, I already know I'm not gonna buy the company, but here I am doing the valuation. Yep. And I'm doing it all the way to the end. I'm doing it diligently. So you can imagine by the time you've done 672 companies, oh, I'm gonna want nothing. I'm gonna want nothing to do with this by the time I'm done. But then that's why we then recommend afterwards, sign in. That's why we'd recommend afterwards that you then have the conviction of your work. Like after having done all this work, imagine doubting it now. Like some things just don't make sense. Like why would you do all this work and then doubt yourself? Why did you do this? What did you do it for in the first place? You know? Uh, okay, let's see. There's hope on this one. No, there we go. Okay, there we go. Okay. So essentially the formula is equals Google Finance and then it's NASDAQ TXG. Um, then it's comma price. So the price. No, I want the price. Okay. Then I close the brackets. Let's see. Nope. Okay. What did I do wrong? So I see there's inverted commas there and inverted commas there, and then further inverted commas on the price. Please work. There we go. It's loading. Perfect. The price has come through. $52.17. I'm even tempted to just drag this price all the way down and then just keep changing the ticker. But let's take it step by step. And then from there, it'll give you the average PE, and then essentially that'll tell me whether to buy or not. Once I'm done, I'm going to conditionally format this page so that it picks out all the companies that have a PE of less than 11. And then dividends, that's fine. That'll just work itself out. Uh, and here, filter all the yeses. So that if a company has a strong balance sheet, has got good positive earnings, and is cheap in inverted commas relative to its price, then it should filter and make the color green or give me some sort of output. And then from that, I will then decide that, okay, this is a company that I'm going to invest in or not. But essentially, that's 10x Genomics, and I'm done. So now we go on to the next company. One down, 671 to go. How many? Let's just check. Let me remove this. Okay, 671. So it goes up to 670. So one down, 669 to go. Good luck. Okay, I'm happy I've got that. So now I can work. So I've just done 10x genomics. I can close that. It was nice knowing you, but unfortunately not good enough. So now it's on to the next company, which should be to you annual report. Yeah, so you just go to Google. Let me maybe go back and show you how I do this. So you just go to Google. If I can just get the screen, what, new share. So I wanna share the screen, correct. Right, so back here. So essentially you just come to Google and then you say to you, and then you say annual report. Press enter. Then it will show you all of these other things, but you can see it's toyou.com. So you say reports and annual filings or reports and filings. And then they've got a nice website. I have no idea what this company does, except cookies, because that's what we do in the 21st century. If they want you, they're going to get you anyway. I see veterans there. Thank you for your service. I'm seeing a nurse, doctor there. Thank you, ma'am, for the work that you do. As it opens, and there we go. We've got toyou's annual report. Thank you, sir. World-class partners. It's eventually gonna tell us, okay, free to degree. So it looks like an educational company. 230 global university and corporate partners. So that's what toyou does. Well, it could be toyou University. Dear fellow stakeholders, in 2022, we accelerated our evolution. Okay, there we go. I'm just gonna go to the business and read what it does, just so that I know what I'm valuing and what I've just valued. It says we're a leading online education platform company. Our mission is to expand access to high quality education and unlock human potential. As a trusted partner to top-ranked nonprofit universities and other leading organizations, we deliver technology and services that enable our clients to bring their educational offerings online at scale. Through edX, we base our best-in-class education consumer marketplace with 48 million registered learners. We host a comprehensive range of education offerings, from free courses to degree programs. Let me actually see which universities are here, actually. You guys let me know in the comment section. If I attend Harvard X, I guess there's University of Oxford, definitely Harvard has 2 years. Yeah, has peer pressure. Do you know peer pressure? Harvard University, there we go. I see Georgetown, I see Howard. Those are some that I've heard from movies. I see Caltech. I wish I did engineering so I could attend the Caltech school. Meta has a university. Okay. Stanford. PQRS Stanford. So I've got Simons, I've got SDA Bocconi, I've got SMU, I've got Syracuse. Huh, no Stanford. Interesting. I doubt they wouldn't have Stanford, but looks like it. That was interesting. Tired now. Let me just go and continue as I was. Yale. Shout out Vanderbilt University. You guys don't know Vanderbilt, one of the men that built America. So I'm looking for the financial statements. There we go. Audited by KPMG, all of that. All right, so let's see how this company matches up. What's nice is that, in fact, already you can even match it up with 10x Genomics. Obviously not the same sectors, but oh, December 31. Right. And assets, oh, I'm gonna need you to stay put because after a while, so it's view, freeze. Those two columns, and then I say view, and then I say freeze. Can't be 2 rows, it's up to 5 rows. 1, 2, 3, 4, 5. Yeah, okay, let's see. Up to 5 rows, perfect. So now I can scroll that way, and I can scroll that way. Sorry, the other way. Perfect. The reason I show you even all of this stuff, guys, is because you get to see from the get-go how I build everything from scratch. So current assets for 2U is 32,307 million. That's impressive. Very impressive. Current liabilities 278,992. Can already tell it's not gonna meet the liability test. Oh, so there's long-term liabilities actually. So I can just fill that in 928,564. Nope. Okay, nope. Okay, and then come back to the screen. Aye. No, man. Okay, December 31. I come back to the screen that I'm on and I'm looking for the earnings information and loss making, loss per share. Yeah, you're gonna kiss a lot of frogs in this business. Negative $4, a $4 loss, that's allowed. And there are people that say, oh, Chairman, but don't you think that in future it's gonna be a good company? Then I would invest in them in future. You don't invest current dollars for future business, what success, what have you. Okay, so then I say control find dividends. Let's see what's the dividend policy. Because we do not anticipate paying any cash dividends on our common stock in the foreseeable future, capital appreciation, if any, will be your sole source of gain and you may never receive a return on your investment. Woo! That is to put bluntly. This is to put very bluntly. So I screwed, I move. Yeah, I don't give myself problems. Like, if you're honest with me that you don't pay dividends, I move. Let me just get the earnings information for the remaining 3 years. So as you guys would have seen, the financial statements essentially show 3 years back to back. So that's just for comparison purposes. And then for the other 3 years, you essentially have to then open another set of annual financial statements to you in financial statements and supplementary. Okay, page 67. Page 67. So, mm, 2019 loss was negative 3.83, negative 9.69, and negative 0.6. Everything must move on, right? Okay, Control X, enter. Oh, sorry. I forgot it's Google Sheets. I'm gonna paste up, I say Control V. There we go. Okay, that one would be 0. Negative 2.52. Would you look at that? They've got similar earnings per share. Negative 0.25. Average is that. Then I say equals. Nope, I'm not gonna say equals. I'm just gonna copy that one. I'm going to copy that one. However, I'm just going to change the ticker here. It probably will be to you Inc. I pressed add to you. Let's see. Loading, not applicable. All right, I'll search it, don't worry. Let's say to you stock. Now this is just so that I get the ticker TWOU. Okay, TWOU. I'm catching the trend. In the US, it seems like you guys want your stock tickers to be written out in words. $3.33. It's a lot cheaper, a lot cheaper. So there you get it. Now next, 3D systems. Just moving my AirPod this side, and that's because I noticed that I looked that side, so I don't like seeing AirPods in my video. But 3D systems, as I was saying, let me pull up the annual reports, investor relations. So one of the things that I was thinking about, and it happened because I've been investing for over 10 years now on the JSE, probably more like 13 years or something, right? And one of the things that came up, I'm having a smoothie. One of the things that came up was, but why don't you just use a stock screener? Like, why don't you just get an app, pay $30, and then this can be done in 5 minutes? 100% spot on. What most people don't understand about using this method and about investing, a lot of people will tell you, at least experienced investors will tell you, that investing is as much a an art as it is a science. And so some of it has to do with that texture, that feel for it, you know. It's like if you're a football coach, sure, you can go and say, give me all the players that are 6 feet high and this so. And then they put them in front of you. But there's that je ne sais quoi, there's that element of expertise that comes solely from actually putting your eyes on this player, on a lot of players. And the way I use it for this is the more you see how many companies are not good enough, the more you build conviction. Because now, by the time you get the winning company, you know what you said no to. And that goes a hell of a long way, much further than when you just get the shares that you want and then you must put your money in them. You don't know what you said no to. You don't know how you arrived there. The computer did everything behind. So I still prefer this method, especially for a new market. For example, for me, the US market is new. If you had come to me and said, what do you think about 10x genomics? And if I'd used the stock screener, all I could have said was, I don't know it. And then you tell me that's a good company, wara. And then I'll say to you, yeah, it never showed up on my stock screener. Like, what an empty conversation, right? Versus now I can tell you that actually I like their balance sheet, but I don't like the fact that they're loss making for the last 5 years. The same with 2U. I never knew that there's such a thing, 2U University. I just know about Coursera and them. I did not know that there is an actual listed company that has got this entire conglomerate of educational institutions. So it gives you that clear, so that taste for what's happening with this company and the shares and what have you. Three-D systems. Oh, they're 3D printers. 3D Systems Corporation markets our products and services through subsidiaries in North and South America, collectively referred to as the Americas, Europe, and Middle East, collectively as EMEA, and Asia Pacific and Oceania region, so no Africa. We provide comprehensive 3D printing and digital manufacturing solutions, including 3D printers for plastics and metals, materials, software, and digital design tools. I have my phone here because these are long working sessions. So I can just attend to my messages on personal life there on the side. Let's see the financial statement. Oh, for some reason the financials are not here. So I'm gonna try again. I'm gonna go back to the glossary and say financial statements and supplementary data or data. I don't know. Ah, there we go. And assets, 834 million. What's great about buying these companies that have got strong balance sheets, right, is that even if they're loss making, even if they're loss making, what's great is that if you don't want to, if they're not performing well, then you'll be comfortable still to sleep at night, knowing that at least they're not going to go out of business tomorrow because they've got more than enough cash to keep on trying and trying and trying. Yeah, yeah, first profit. First profit. There we go. Smoothie, smoothie. I got an interesting question here on my phone. A friend asks, what's a realistic time frame for me to get a return from shares, investing in stocks and shares? I always say minimum 5 years. If you're not willing to be in it for 5 years, then forget about it because you take a company like 10x Genomics, 2U, and 3D Systems that are loss making with cash and they can keep going, but you can tell. And these are good industries to be in, but they're not going to make money tomorrow, especially if you are investing in a company like that, where you are investing in the story and innovation and all that other stuff, which is also to why I like to do these calculations. Because at least if I'm investing purely on numbers, then I'm comfortable that what's this? I'm comfortable that I'm a lot closer to the money making than if I was buying a story and I must first survive the loss making years. Interesting one is someone saying to me, if I have goals and I tell you by when I want to meet them, you should be able to drop an estimate plan. So that's for financial planning. And I say, look, what the finance industry won't tell you is that nobody's got a crystal ball where they can give you certainty. This is very much a probability industry. So you take a guess and say, if this company gives this much, or but all of those ifs then translate into probabilities. Even the bank, when they say we're going to give you whatever fixed deposit for 5 years, whatnot, it's a guarantee from a perspective that they've actually codified the language in a manner that you can be able to be comfortable with what they're saying to you. However, as we saw with SVB Bank, what happens when that happens? Because what the bank then doesn't tell you is that in the background, they're taking risks with your money. What do you do then? Yeah, I told you guys these are gonna be some boring periods. There's gonna be a lot of silence. It's like 2018. And the silence is solely because I'm working, not necessarily because I'm ignoring you guys or whatever. And yeah, some things pop up in the background and I attend to them a bit. But yeah. Oh, I went, yeah. The reason it takes so long to get earnings per share data is because you have to physically open the each year's annual report. You just do it. Luckily, there's comparatives, so you can fill those in. Again, Warranta is a stock screener. You heard me. I don't trust them. Okay, let's actually check what the dividend policy is. We do not currently pay a dividend and have not paid a dividend. Any dividends on our common stock, and we currently intend to retain any future earnings for use in our business. Yep. The US is very big on not paying dividends. And I can understand the people that actually literally criticize you for paying dividends. So I'm like, I stock screener. Let's see. Uh, I'm gonna oak right here. Oh, that's better. They've got a better ticker. Very straightforward. No. Oh, NASDAQ. Oh, it's NYSE. It's New York Stock Exchange. Ooh. So that's Wall Street. Yay. My first Wall Street stock. Oh, by the way, if you see the lighting has improved, I had paused the video when I'm shooting at night. So I see now that at night the lighting is a lot better. So nighttime is perfect shooting time. And if you see me keep looking up, it's because there's a ring light up there, ring light here, ring light here, and ring light there. There's a lot of lights. There's like lights all over my face. But yeah, that explains that. All right, A on, A on, A on, A on. Should be insurance. Should be insurance. So rule of thumb, I don't invest in insurance companies or banks or that sort of stuff. Simple reason that the annual reports and stuff are very complicated because they invest in financial instruments. So they don't have straightforward current assets and straightforward. Oh, this is a very cool, what do you call this? Very cool cover page for your annual report. Check this out. Check this out. Look at that. The time is now. This is really cool. Futuristic, eh? I like that. That whole galaxy stuff here. Well done, guys. Hey, this is HVAC. High value, HVAC. Okay, okay. A little secret on these sort of things, for example, I can bet that they either probably are so big that they're overconfident and they've overborrowed, or they actually are very conservative. So I've learned that things like family businesses and these industrial type businesses, they're very, very good on their balance sheets, right? And then even profit wise, they tend to make a lot of money. There's a lot of margin in hardware, and they tend to pay dividends a lot because they're an unfashionable business. So they kind of have to bribe you to stay in there. It's not a bribe, but it's because it's very difficult to then go and find alternative investments. So that's just hypothetically what you then set as an expectation looking at a company like this, right? Then from there, what you have is that if those metrics are correct, chances are then the share price or the PE ratio is going to be so high. And that's because old money knows this and they make sure that they buy it. Alternatively, then they add a massive discount, normally at a PE of like 4 or 3 or something. And then I think or even 8. And then that makes them ripe for you to purchase them. I like companies like that because they're straightforward and they pay you dividends. I like that. So let's see. AAL. Let's bring the screen back this side. about this company, man. This is an analyst's dream, right? And companies that do this, I haven't even looked at the numbers, right? I will venture that this is a company with a good set of financial statements. When I see this, I see a company that's not trying to hide information. They're very straightforward. They're very forthcoming with information. Look at that. I'm screaming. Look at that. They put up a 5-year financial data, and then you literally can just pick it off right there. Look at that. The profits that I was talking about. The only thing I don't see is dividends. I'll have a look. I am certain they should be paying a dividend. Look at the current ratio. That's exactly what I'm looking for. And then the PE ratio, I did say it would be sky high because then old money knows this and then they invest in it. But this, this is what we're looking for. This is what we're looking for when we're looking for financial reporting. Like, this is a joy to read. Like, as an analyst, when you see this, you pause and you just respect management. You know that this is going to be a no BS story. Man, jeez, when you get this, you are happy. You are happy. Look at these numbers. Numbers are impressive. These numbers are impressive, of course. Of course, of course. December year end. Oh, that was nice. Interesting rule of thumb. A company like this, right? You normally just multiply the earnings per share by like 10 and 10, maybe 15 for the US to get a PE ratio. And interestingly, if you invert a PE ratio, what does invert mean? If you turn it upside down, it essentially gives you the expected earnings per share. So if I say PE ratio of 15, then you just say 100 divided by 15, and that's your expected return, which is 6.6%. So when I say I prefer a PE ratio of 11 and say 100 divided by 11, I'm expecting a 9% return minimum. But this company, wow. Wow, wow, wow. Streaming. Let me say control find dividends. I fail to believe that a company like this doesn't pay dividends. I cannot believe it. Control find when we say dividends. At the discretion of the board, we pay cash dividends. Board approval is required to determine the date of declaration. Our cash dividends for the 3 years ended December 2021 are as follows. What I tell you? What I tell you? Man, hey, on, you have a new fan. So normally a company like this, you'd say it's a good company, great company for that matter. The only thing that you would then say is because you know it's always going to be expensive, this company you put on your short list, and then you wait to see what's this, if it ever comes into your price range. That's that. They paid 2 dividends, and end of year dividend and an interim dividend, middle of the year dividend. I like that. I like that. So I'd buy this company for $11, and they pay a dividend of about, if I take the 43 cents and the 38 cents and I multiply that by 10 as well, of about $5 over 10 years. But I'm happy with this company. This is a very good company. This is what I am looking for. And it's that easy as well. Do you guys see how uncomplicated I am? Like, people are looking for all these amazing things to find and wara wara. And I'm like, hey, yo, man, first and foremost, let me just try and get a company that is actually profitable and has got a good balance sheet. And once I've got that, then I can go further and look into all of these other metrics like whatever else, like growth rate and uh, going to space and inventing water and all of that stuff. Like, I'm cool with that. I'm cool with that. But I'm happy with this company. This is solid. Aeon, you have a fan in me, man. Who's the founder? I'm gonna go back to the founder. Doesn't even say who, but him, man. God bless you, man. You're a real American. People building real companies. It even has a read this report. No way. No, guys. Like, what in paradise is this? Like, look at that. Read this report. Your view helps our reports be more useful. Hey, man, how can I not give you a 5 out of 5? I appreciate you, Aeon, man. Mwah, mwah, mwah. Nah, I see why. You guys, man. Nah, man. Wow. Good on you guys, man. Good on you guys. Man, I'm impressed. Aeon, I like you, Aeon. I like you. I like you. I'm just getting the 2019 report so I can get the 2017 earnings per share. It's a comparative. And then after that, I can get the remaining dividends. Then I'm good. Like, even in 2019, you guys don't understand, bruh. Like, even in 2019, the annual report looked good. Oh, you guys are on the same screen. Oh my God, things I nearly did. I nearly moved off screen. Like, look at that. Even in 2019, they were still doing the same thing. Like, a company that is transparent about their numbers. Like, I appreciate that a lot. Like, you cannot buy this sort of transparency. Look at the current assets to current liabilities. Ah, come on, that line item there. Look at that, man. Compared to current liabilities. Compared to current liabilities. Long-term debt. Look at this. They had years where they had none. This is on the New York Stock Exchange, or is it the NASDAQ? NASDAQ. Nah, man. Shout out to you guys, man. Hey, man, if any of you guys, your uncles, your dads, whatever, are working for this company, holla at me. They're building society, man. Look at me put a negative. What a company, man. What a company. You control fine dividends. I love you, AA. Like, you don't understand. You don't understand how good it feels when you've been kissing frogs to finally get a good company. Like, man, I appreciate that. $3, how much I'd pay for the dividends, and $10, how much I'd pay for the stock. I would buy the stock for $10. There's no way it's anywhere near $10, but I respect them. I really, really respect them. So I'm gonna take the NASDAQ stock feeder, and then I'm gonna take a guess, also largely because it's written up here on my web browser. $65. Good on you, man. Good on you. $5. Man. I'm jealous that I can't buy this company. I'm jealous. But these are very good numbers. I love it. I love it. I'm gonna highlight them green. Hey, God bless you, man. God bless you. Use a lighter green so it's not so overpowering. Man. Yeah, you can tell I'm into the stuff, man. You see that you don't get from a stock screener. Stock screener just says AR and you look at it, you look at the PE and you're out. And it's like, nah. I understand people that say to value investors, it's more than just PE. Yeah, that's what I'm showing you. It's more than just PE. It's walking the journey of finding it. It's like the difference between taking statistics and saying Messi is the best player and actually watching all the players and then saying, run me up the statistics on that. Okay, I see Messi, best. Wow, man. This one from here. I don't expect good numbers from you. Simply because experiments, it's difficult for experiments to make money. So it's NYSE, New York Stock Exchange, ABT. Okay. Obviously, I'm spotting the trend. New York Stock Exchange, 3-letter tickers. These dividends, but we'll see. We'll see. Oh, they make some 135 years old. Impressive numbers, medical company as well. We'll see. And I like this company, by the way. I mean, it looks good. 50 plus years of rising dividends, consecutive years of dividends, 99 consecutive years of dividends paid. Man, that is flipping awesome. It looks like they make medical equipment. Yeah, let's see. I don't want to over postulate, but medical equipment companies, from what I've seen, they tend to be very confident, let me say. And so their balance sheet tends to be very stretched. And that's because they know that nobody's ever going to bankrupt them. But let's see, let's let the numbers do the talking. Let's let the numbers do the talking. These are very, very good numbers for the earnings. I'll come back to the earnings. Let me just go to the balance sheet. I'm a creature of habit. Prefer starting with balance sheet. So again, December. So December is quite the year in the US, eh? I would make it a holiday practice for our family to read financial statements. This is billions. This is how you know you're a medical services company. Those are billions. 25 billion, 224 million dollars. Shit. Let's see if the liabilities are in check. Yep. 15 billion, 489. And someone would say, I'm conservative, wara, 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 wara. Hey, man, the numbers are the numbers. I did say Long-term debt is good, but the current one, and look, it's not always bad. Oh, sorry, that's a no. Um, that's a no. That's because this divide by that, that's not 2 to 1. And yeah, look, you can say I'm being overly strict, especially once we're dealing with billions of dollars. But my job is to sleep at night, first and foremost. Once I've gone through the entire checklist and I see how many companies I have that meet the requirements, like Aon and stuff like that, then I can come back and say, okay, of the ones that don't meet the criteria, which one came close? That's that for me. So yeah, impressive numbers, I must say, impressive, but hey man, a requirement is a requirement. And some people will say those are the limitations then of following formulas and whatever. I say, let's first do this, then we'll come back and exercise leniency. But you don't exercise leniency from the get-go. That's just a recipe for not sleeping at night. And if you're in the business of doing that, hey man, I might. I'm not gonna sign up for that. The zeros that I'm keeping as well, because somebody might just ask, why don't you just move everything to the right and then have 2022 as a thing? I think the zeros are just gonna motivate me to come back and fill in the updated financials when they come back, when they come out at the end of this year. Then once I've done that, then I know that I've flipped through annual reports this one time when I was doing it, plus again at the end of the year, then I really will be fed up with numbers. Like I won't even want to see one more annual report, but I'll know that I've bonded comfortably with the numbers. So yeah, there's a method to my madness. There's a method to my obsession, to my quirks. Now, good on you, about laboratories. Good on you guys. The numbers are impressive, I must say. I don't have any complaints about your numbers. You just barely missed the current ratio requirement. Watching a breathing video, so I'm just checking out some of the advice that they give. I know I was listening to music earlier, but now I'm listening to Andrew Haberman. But not the other Haberman, the other one. Both doctors. Unlike the brothers. Such dividends, dividends. Dividends per share. There we go. That's the per share amount. That's a very healthy dividend compared to the earnings per share. No, it's a good company. They're very transparent as well, actually. They're not hiding numbers. I like that. I respect that. I respect that. So I just need to get 2017. Just so that I can change the year. Nine consecutive years of dividends and 50 years of rising dividends. That's impressive. I'm not reading annual reports, man. I'm not reading reports. Tell me a lot, man. It's like they respect you. It's like they're showing you that, hey, man, you matter. You're a stockholder. Let me see the 2020. 2020 was good. These are the years where COVID was rampaging the world. Good numbers, man. And even cheaper than what's this? Abbott. So do you see that? That's what I want to. That's also the benefit of doing these sort of things and numbers and what have you. So they're on a 62 average PE, they're on a 50 average PE. So now you get to see that, okay, that's the difference. $12 in dividends, about $20 average share price or in earnings there. I've got a new Abbott, but fix the current ratio if you want my money. Now, Abby. 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 $18 billion of 8 billion. Global diversified research-based biopharmaceutical company positioned for success with a comprehensive product portfolio that has leadership in immunology, oncology, and aesthetics, neuroscience, and eye care. Nice, Envy. Noise. Let the numbers do the talking. It's nice to see companies that are finally paying dividends. Very nice. Oncology. Whoa, basic earnings of $6.6. Shit, that's a lot. So let's see, year end is also December. Billion. Money, but niggas are everywhere down. Niggas use their money. That's bad. You don't believe this number. These guys are paying all of their money out in dividends. It's a lot of dividend compared to the earnings. Like these guys are keeping nothing. Let me go back to that balance sheet, man. I need to see these numbers again. Let's see these numbers again. I want to go back to the balance sheet. I just want to see the numbers again. Because nah, man, it's not making me sure. It's not adding up. Sorry. Sorry. 10 billion in cash. The current liabilities are high. But I see why, because they've got accounts payable and accrued liabilities. So that's essentially accounts payable is people who you owe money. Makes sense, but that's why I call it arrogance, because these are people who, because you're a monopoly essentially, they are willing to give you their products and like give you 3 to 4 months to pay them back, which is very good use of working capital. Um, from a management perspective, and I'm a fan of that. I like good management. However, as a shareholder, as an equity holder, I want to sleep at night. And that for me is too risky, especially when you consider that long-term debts are sitting at 60 billion and other long-term liabilities is 31 billion. Nah, man, I'm not, my level wouldn't take that. I'd have to keep up with the company. I'd have to every year. No, it's too much. It's too much. Yeah, I don't know what their share price is, but I don't like that balance sheet at all. Very low share price relative to Abbott Laboratories. It's just your balance sheet is shit, dog. With Abbott Laboratories, I sleep. I sleep with Abbott Laboratories. With you guys, man. With you guys, dog. Like, I hate being involved as a shareholder. Like, I've got a job too. Like, why can't you do your job and I do my job? You know, like, leave me out of the running of your company. Look at that, 37. But what I like is they're coming down. Do you see the average PE ratios are coming down now? But yeah, the balance sheet, fix your balance sheet for me, then we'll be good. But other than that, I don't. I'm even gonna highlight that red because, hey, my nigga, that's too much. Like it's too much. Oh, anyway, let's go to Accenture. Very controversial company. I don't know why it's controversial. Let's don't sue our guys. Please don't sue me because I don't know why you're controversial. But there we go. Who's that? Ooh, sorry. When you looked at how many annual reports, so it's 1, 2, 3, 4, 5, 6 companies. And let's say on average, I'm opening 2 annual reports. That's 12 annual reports already that I've looked at. We had a truly extraordinary year. Outstanding financial results and 360-degree value we delivered beyond our financials. Don't be surprised if it's another medical company. Yeah. Leading global professional services company that helps clients build their digital core, transform the operations, and accelerate revenue, creating tangible value across the enterprise at speed and scale. Okay. There's hope for Accenture. From what I've seen with like tech companies actually have more conservative balance sheets than most companies. I suspect it has something to do with something like they understand that a lot of the gains that you make have to do with how many times you can afford to take a shot. Um, and the easiest way to take many shots towards success is essentially to have a strong balance sheet. But let's see. I hypothesize, and the reason I come up with hypotheses is because I essentially, yeah, I'm engaging the subject matter. You know, it's like you're watching a when you're watching football. That makes sense. Why I think it's like when you're watching football and then you feel the need to guess the score. Like you don't need to. If you just watch, nothing's gonna happen. Ah, This is why I was annoyed that I didn't get 2022 or 2023. August is now, so yeah, the 2023 apps wouldn't be out yet. So I'm still gonna use 2022. That's a lot. $70, $80 company. It's actually not that bad. The average PE, not that bad compared to Abbott laboratories. Oh, interesting. Activision Blizzard. This is a very interesting one. Activision. I think I'll even project the screen for Activision. I'll project my screen and then I'll come back to that screen and then you guys can see what I'm seeing with Activision. 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 I just want to see what the experience is like because it's been in the news a lot. Activision Blizzard. Microsoft wanted to buy them, you name it. So today we put under the microscope Activision. Interesting cover of the annual report. Why did I just always think this is an energy drink? Largely because gaming is probably associated with energy drinks. Their financials, I expect them to be shit. I don't even want to lie. The leading global developer and publisher of interactive entertainment content and services. We develop and distribute content and services on video game consoles, personal computers, and mobile devices. We also operate esports leagues and offer digital advertising within some of our content. Interesting. Why is I expected to be shit? Gaming companies, I expect them to think. I expect them to be running. I think it's quite thin margins, or to be running very tight balance sheets. For some reason, I know, for example, I used to be an investor in Hosken or something like that. The Hosken, or it's the one that makes gold game boards. Yeah, them. Them. The statements are so basic, I must say. It's like someone did them on Excel, and then PDF them. But I respect that. I mean, if you check Berkshire Hathaway's financials, they're very straightforward. Like there's no bells and whistles. It's just to the point. This is what we did. This is how we did it. And are you investing in us or not? Format is horrible, man. For a gaming company, I'd expect you guys to have much better like interactive stuff and wara. Not getting any of that. December 31. Current assets 14,469 billion. Actually, it's quite good, impressive. I am thoroughly humbled, thoroughly humbled, thoroughly humbled, humbled, very, very humbled. This is super impressive, Activision. Microsoft, good on you for trying to buy this. That's what we're gonna fight. Dividends probably don't pay a dividend. Would I want them to pay a dividend? Guys, not always, man. I'm a sucker for dividends, dog. Like, I don't believe in the whole method of getting my money back. Yeah, I don't trust you. They've paid a dividend annually since 2010. Activision Blizzard, you have thoroughly impressed me. I am thoroughly impressed, man. I'm thoroughly impressed, I must say. I'll eat my humble pie on this one. I'll eat my humble pie on this one. It's company number what? 10? No, not yet. At 10, I'm gonna stop the recording just so that you guys are not put through like 5 hours of video. And then yeah, I'm gonna continue in the background. And yeah, I'll probably do another video midway. I'll do another video maybe towards the end, something like that, just so that I still keep you guys in the loop, what have you. But I think you get the gist by now of what it is I'm doing. That's how many companies I've done. One, two, 3, 4, 5, 6, 7, 8. So two more, then I'm gonna essentially cut you guys out. I I probably will share the link at some point. For you guys, obviously, it'll be a view only link. And then myself and Katlego, shout out to Katlego Mogotlhe. He's doing his CFA. He's the one that got the ball rolling. He created all, so I asked him to find all of these companies on EasyEquities and just put them there for me. And then I will come in and do the financials. I think he said he's valuing at the bottom of the page. I'll check that now. I'll check the work that he's doing now. And yeah, just give a shout out to that. No, Activision, I see why you're getting bored, man. I see why you're getting bored. I really do. I'm impressed. NASDAQ ATVI, NASDAQ. So the NASDAQ ones, I remember. I I'm impressed. I'm gonna show you guys the numbers to Activision, by the way, but you guys could see them here. But I'll show you on the spreadsheet. I was impressed, man. I really was impressed. Makes me respect Microsoft's capital allocation. Okay, 2019. This one was during COVID. Now, newfound respect for Microsoft, man. This thing that you're trying to buy is it's good. That's why I missed you. Sideways. Once the US companies are better than quite a lot at reporting information, it's not all over the place. It looks amateur, but it's not all over the place. I respect that. Yeah, you'll hear me use the word respect a lot, and that's because, man, if you can report numbers, you're up there, man. You're up there. And that's because you can tell, you can see how much work goes into this. So I end up respecting people that make that job any easier. So PwC is the investors here, I mean the auditors here. Okay, Activision Blizzard. Activision. Let me show you them numbers. Let me show you how them stack up. Look at how clean that is, man. That's clean. Clean. 49 as well. 9 years is a long time to get my money back. But yeah, you guys get to see then why we end up saying You must be prepared to invest for the long term. What's the next one? Adobe. SEC filings. And then people would also ask me, why do you not look at quarterlies? Quarterlies encourage short-term decision making and short-term thinking. I'm not a fan of that. I'm not a fan of that. So difficult to get Adobe's annual reports. Can I have your 10K, guys? SE 10Q, 8K, 10Q. Here is, there's the 10K. Let's check 10K. Adobe. Okay, there's the PDF. Oh, like, I want you to see this. Like, this is scary. This is actually very scary. Let me show you this. Oh, Adobe. Dog, chill. Look how scary that is. There's the US Securities Exchange Commission. Hey, man, that's scary. It's as if I'm inside the US government database, man. It's like I'm changing shit here. No, I'm not gonna change anything. That's scary, man. Let's go to item 8 quickly. Actually, let me just start with the business. Reading what? Founded in 1982, Adobe is one of the largest and most diversified software companies in the world. We offer a line of products and services used by creative professionals, including photographers, video editors, graphic and experience designers, and gamers, communications, including content creators, students, marketers, and knowledge workers, businesses of all sizes and consumers for creating, managing, delivering, measuring, optimizing, engaging, and transacting with compelling content and experiences across personal computers, smartphones, other electronic devices, and digital media formats. They actually are. They actually are. I use Adobe for signing PDFs and storing PDFs and that sort of thing. So I agree. I think hands down, nobody else seems to do it better. Subscription, 93% subscription revenue. Okay, product is 3% and services and other is 4%. Okay, let's see. And another time on my side. No, you don't. It's 2 a.m., man. It's 2 a.m. You see my eyes straining or getting red. That's why. That's because it's 2 a.m. It's 2 a.m. Adobe, Activision Blizzard. Thank you, man. Activision. I don't know how to pronounce it. I am in Africa. You disappoint me. Why don't you? Why don't you disappoint me? Man. Yeah, look, I'm not a fan, and I'm gonna keep saying this. I'm not a fan of aggressive capital structures. Like, there's no need for you to be riding it so thin that you have no margin for error. Like, yeah, man, that stuff is not impressive for me, man. I am trying to sleep at night, contrary to the fact that I'm doing this at 2 a.m. But I think that even goes to what I'm talking about. Like, I can't be doing share analysis at 2 a.m. Nah. And then when I'm done and I've bought the share, I can't sleep at night because, yeah, financials are horrible. Like, nah, I don't work like that. Huh. I search dividends and there's nothing. Control find dividends. Nah, there's no way. There's nothing on dividends. Let's say control find. Let's say assets to see if it can read asset. Yeah, I figured. Control find. There's something happening, man. Adobe, come on. Oh, but then it's the SEC's website as well. I might have to search it manually. Welcome to the life of stock analysis. Sometimes the shit don't work, so we gotta check it out manually. You can't ignore it because it's information that you need to make decisions. So you have to go and find it. You have to go and dig through the financials to see if maybe it's hidden somewhere or whatever. But I didn't like the fact that I don't know why I can't just search control find assets. That's weird. Oh, don't take me to the beginning. Balance sheet. Yeah, shareholders equity. Yeah, there's been repurchases of common stock in prior years. I'm not seeing anything on dividends. Yeah, I figured. We do not anticipate paying any cash dividends in the foreseeable future. Clean. Of course you don't. Dividend. Under the terms of our term loan and revolving credit, we are not prohibited from paying cash dividends unless payment would trigger an event of default or if one currently exists. We do not anticipate paying any cash dividends in the foreseeable future. Yeah, man. For me, see, that's why I don't like debt, because now covenants are holding you to paying dividends. Like, I, hey, man, ain't none of my business, man. If somebody's okay owning a company where you're not allowed to pay dividends, and the reason you're not allowed to pay dividends is like the bank or whatever, like if the bank wants to run the business, then why don't they buy shares in the business? If I'm buying shares in the business, give me my damn money. Like, give me my money. Of course, I'm annoyed. Suspect it's NASDAQ. That's because it has a ticker symbol. Oh, that's because it has 4 letters in its thing. ADBE. Let's see. And tech companies tend to be listed on the NASDAQ. You see, there we go. ADBE. Yeah, you buy yourself, dog. $560. Nah, dog. Okay, last company is AMD. Then yeah, I'm going to bid. The annual report, advanced micro devices. Let's see it. It's not inspiring. It looks like it's also going to take me to the SEC website. I would hate it. There we go. Annual report to security holders. Let's have a look. Let's have a look. Yes, shareholders. Thank you. AMD, I think, makes the chips in our stuff. Let's see what it says. AMD was incorporated of our strategy. Okay, can go to business, back to business. business. There we go. Fortunately. Sorry. Okay, we're a global semiconductor company primarily offering server microprocessors, CPUs and graphics processing units, data processing units, field programmable gates, CPUs, accelerator, you name it. All right. That was cool. Cool. Let me just start with dividends. Control fee. Do you guys pay a dividend? Expected dividends 000. The expected yield is 0 as the company does not expect to pay dividends in the near future. Childish, man. If you're not paying dividends, childish. But hey, man, this is what I gotta go through. Like, what do you want me to do if you're not paying a dividend? Buy and pray. Yes. You know, sometimes we're hard on people that gamble and treat shares like gambling devices. But what do you expect if you're not paying a dividend? Like, then a shareholder, the only way they make money is by selling your share. And you can't even go on the Warren Buffett tip because you're not Buffett, you know? And I'm not saying that you don't have a prerogative to build your business. You do. You very much do. Um, just understand if I'm giving you my money to build your business with, like, pay me back, dog, you know? And I'm not saying pay me back with money that you should be using to grow, but man, at least make profits and pay me back. Like, that's the whole point. That's the whole schmuck of this deal. Very conservative balance sheet. As I did say, tech companies tend to have very conservative balance sheets. I think that's because they have to take multiple shots at the same target. I don't like this, man. Come on. You could have disclosed your stuff a lot better. Now I have to do the calculation myself for your long-term liabilities. The balance sheet's good. Just if you're not paying a dividend, it's hard for anybody to take you seriously. Okay, the podcast stopped. Let's find another one. Okay. Okay, we're on the earnings per share. I hope we're not making losses, AMD. Because it's one thing to say we're investing in the business, but if you're making losses on top of that, like, let's just make money. Make money. Shout out to McG, man. That's the podcast that's playing now. So I was listening to Daira, the CEO. It lost me. Don't invest in that, bro. Mess me. You can mess me. You can tell me that I don't understand what I don't. Must be NASDAQ listed. Let's see. NASDAQ AMD. But I was saying, shout out to McG, man. He's playing in my ear now. I was listening to that of the CEO earlier. That was very good. McG, South African, like it's alternative media. You know, it's informal, it's relaxed, it's chilling at home. I like it. Yeah, guys, those are our 10 companies. You're 141 average PE. Let me just check. It is 10, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 companies. And out of the 10, as you guys can see, two that I found that are worth my money. Abbott Laboratories, honorary mention. Let me actually highlight where they missed it so that when I scroll through here later on, I can just find it easily. Okay. These I'll put both because you're just a shit company. Like not in a bad way, like your balance sheet. Yeah. Abbott, I'd like to buy you though. You're a nice company. AbbVie, you are just too arrogant. Like, what am I gonna do with that balance sheet? Activision, pleasant surprise. I must say, AMD is the fact that you don't pay a dividend and the fact that you actually are loss making in these years. So yeah, that's company valuations. 110, 660 to go. I did say I'm gonna go to the bottom of the spreadsheet to check what Katlego is doing. Oh, he's got Alibaba there. Alibaba probably missed it because of that. So I'm gonna put red there so that my boy can see where Alibaba missed it. Otherwise, that was very close. So if their current assets was like 103 billion, then they would have been fine. Do you see how close we cut it? 56 times 2 is 102 billion. 102 million or billion, doesn't matter to me. It's big numbers anyway. But that's how close they cut it. But it's not good enough. So I rather highlight it and then it shows and then I'm good. I see his ticker is there. My boy. Bereka, my boy. But yeah, shout out to the boy. He's the one that set up this working paper. And yeah, as you can see, I'm smoking him 10 companies to one. Good luck. Good luck, Ntwana. What else did I want to say? Oh, balance sheet. So 4 companies have got good balance sheets. 2 are worth my money. But even those 2 that are worth my money, if you guys can see, the PE ratio is super high. It's too expensive. It's just, yeah. I wait. And people say you could be waiting forever, and that's the whole point. I sleep well at night, holding my money. Thank you very much, guys. It was a pleasure having you for this session. I don't know how long the video is gonna be. Just bear with me. I hope it's not longer than 3 hours. I know it definitely will be 2 hours because I watched the whole episode of Diary of a CEO. So let's see. But yeah, pleasure hosting you guys. Let me just come back to my CF. Yeah, there we go. Oh, and why I was looking that way is because the screen is that side. So I've got 2 screens, the laptop screen here, and it's the second screen there where you guys were seeing all that share stuff. But thank you very much for joining me. It's been real, it's been nice. I'm Chairman Mo. If you watch this far, like get a life, but over and above getting a life, I think you will get to appreciate what goes into the process. what goes into the book that I published. If I can find it, it's nowhere here near me. That's fine. But I essentially, when I'm done with all of this, I publish a book in hardcover that says, these are the companies that I'm investing in, and this is why. But I limit it to 20 in South Africa. I want to go 10 in the US. I will see. I probably might go 20 as well, because it doesn't make sense that I'm investing in 20 companies in a stock market that has got 400 companies. And when I go to a stock market that's almost double the size of that, I only invest in 10. That is high concentration. So I rather keep the 20, then it has the effect of being 10 by virtue of the fact that it's a bigger market. And then, yeah, only the best will make it. Stick with me to see who those are. And we're going to make money. We're going to be okay. Going to earn in dollars, spend in rands. But I'm glad that you guys finally get to see quality financial analysis. As I said, it's taken me 2 hours to do 10 companies. If I extrapolate that out, it should take me, so if I say 2 times 670 divided by 10, it should take me 134 hours. That's not bad. Divide by, if I'm doing 2 hours a day, that should be 67 days. That's 2 months. I did tell you guys that it took me 1 month to do 400 companies. So it should be about 2 months to do 700 companies. About 2 months. So it's September now, November, October, November, or September, maybe the whole of September, then October as well. In November, I will be ready for release. That's if I'm disciplined. That's also if I don't have any other work on my plate. This doesn't pay me until you guys buy the book, until you guys take my consultation services. So I'm doing this for free. It's a labor of love. It's to make me an expert. It's to know what I'm dealing with when I'm in the US. And then, yeah, after that, we'll see. But it's been real. It's been good. It's been nice. I'm your boy, Chairman Mo. I'm out.